Ladies and gentlemen, what is happening in the economy right now we have never seen before. We're seeing layoffs skyrocket. We've got the government shutdown that is hitting the longest government shutdown in history. We've got all these layoffs happening that are worse than 2008, but we haven't even had a huge financial event yet like the global financial crisis. So this tells me something is very, very wrong. And we've got some new data that may shock you what's happening with the US consumer and how big of an impact this government shutdown is going to have on the economy. So everyone, this is going to be a very, very important episode. You need to pay attention to what's happening in the markets right now because your job could be gone next. And you also need to know how you can prepare so if the worst does happen, you will be okay. So everyone, you know what time it is. Let's not waste any time. Let's get straight into the news, the facts, and the data. Well, okay, first things first is this, everyone. Look at this. US consumer sentiment near 3.5-year low as government shutdown fuels anxiety. So that's right, everyone. Things are getting far, far worse than expected. So the US consumer sentiment slumped to a near 3.5-year low in early November as households across the political spectrum worried about the economic fallout from the longest government shutdown in history, which has caused disruptions ranging from food benefit payments to grounded flights. And that's exactly right, everyone. People are already struggling and struggling massively, but now they're not getting their SNAP payments. And also what is a huge producer of GDP is obviously people traveling around the country. But now a lot of flights are having to be grounded. They're cutting flights massively right up to the lead up of Thanksgiving. It says here, still, the University of Michigan survey of consumers on Friday confirmed what economists described as a K-shaped recovery, where the high-income households are doing well and the lower-income consumers are struggling. Sentiment increased among customers with large stock holdings, which the University of Michigan attributed to continued strength in the stock market. So that's exactly right, everyone. And this is what we're seeing around the world, not just in the US. We're seeing this in countries like Australia. We're seeing this in Europe. We're seeing a K-shaped recovery. And really what we're heading towards is a two-class system. We're going to have the mega rich, and then we're going to have those that are on UBI. And again, many people may think, oh, UBI, I'm going to get $1,000 a month and I don't have to do anything. Well, that $1,000, $2,000, even if it's $5,000 a month, whatever it is, if they print money, the cost of goods are going to go up, and that UBI is only going to cover the very basics. You're not going to be living a comfortable lifestyle on UBI ever, because every time they create these government schemes, it simply devalues the currency. But yes, this is what we've been seeing more and more, the wealth gap. Those that own lots of assets and those that simply don't have any money to afford to invest. All their money goes on rent, all their money goes on groceries, utilities, clothing, money for their kids. They don't have money to invest, millions and millions of dollars in the stock market. And if you think about it like this, if you're earning $1 million per year, most of your expenses is not housing, groceries. Your biggest expense is tax. For example, if you're getting taxed 35% of your income, that's $350,000. And the majority of their income goes towards investments. So if you think about it like this, if they've got $1 million portfolio and it goes up 25%, well, they've just made $250,000. Where, say, for example, they're living a lifestyle of, say, $100,000 a year, well, the costs for them go up 10%, like what's happening for many US consumers, far above the CPI rate of 3%. If their costs go up, well, that's only $10,000. So their lifestyle, they're still getting richer and richer, even though inflation is going higher and higher. It benefits the wealthy that own large amounts of assets and those where all their money is on rent, groceries and stuff, and they don't have enough money to invest. Well, they're the ones that get hurt. It says here, the K-shaped economy was also evident in a conference board survey last week. The economic impact of the shutdown was far worse than expected, though activity was likely to rebound quickly once it ended. Well, that's if people have a job to go back to with all these layoffs that we're seeing right now. Shutdowns generally only moderate economic impacts given their typically brief nature and the economy bouncing back when the government reopens. But this is a warning sign that this kind of prolonged shutdown could lead to more meaningful economic weakness. And that's exactly right, everyone, because like we always say, one person's income is another person's spending. Yes, these government employees will still have their job when the government reopens, But what about the small businesses that they normally shop at that were just getting month to month or just getting by month to month? What about all these businesses that hired a bunch of people for the holiday season, but now they're not having any customers, so they're now having to lay those people off? The longer and longer this government shutdown goes on, the more long-term economic pain we're going to see. So I'll bring up this chart here. We can see the US consumer sentiment, the University of Michigan's November survey of Public's economic outlook. We can see here it is declining and declining massively, and hasn't been at this level since, look here, 2008. And again, people, we haven't had a huge financial crisis yet. So what happens when we do have another bank failure, when we have some kind of hedge fund collapse? We're going to see the worst depression of our lifetime, in my opinion. But wait till you see what else I found. The government shutdown has led to cuts in benefits, including food stamps for millions of lower income households. Hundreds of thousands of federal workers have been furloughed, and others are working without pay, while travelers are facing delays at airports as flights are grounded. The nonpartisan Congressional Budget Office estimate annualized gross domestic product in the fourth quarter could be reduced by 1 or 2 percentage points. While most of the decline in GDP would eventually be recovered, the CBO projected that between 7 billion and 15 billion will not. And people, I think it's going to be far worse than this, because the government always tries to downplay the real impact it's going to have. The sentiment weakness also reflected the worries about the labor market. She said the share of households expecting the unemployment rate to rise over the next year, you're not going to believe this, people, jumped to 62%. And do you know how bad this is? This is the highest level since 1980, from 52% in October. So people, we're breaking all kinds of economic records, and not the good kind of records. The reading was mirrored by a survey from the New York Federal Reserve showing respondents expected the jobless rate to increase in the coming year and anticipated a tough time finding work if they were to become unemployed. Now, the unemployment rate is still around 4.3%. This is a 4-year high, but we were meant to get more data on how bad the unemployment rate was going to be, but that's when they shut the government down. So could they be trying to cover up how bad things really are? Economists also point out that spending is mostly being driven by higher income households, as lower income households are bearing most of the brunt of a sluggish labor market and higher prices from tariffs on imports. And that's exactly right, everyone. Just like what I talked about earlier, how most of their income goes on taxes and investments. The same thing, for example, if they've got a portfolio of $10 million and they no longer have to work, well, if there's huge layoffs, they don't have to worry about finding another job. And also, the more layoffs there is announced by these companies and they go ahead and put in some buzzwords saying we're doing this because of AI, and then their stocks shoot up, it's even better for them. So again, the wealth gap is widening between the have and the have-nots. The top 20% of households by income drive 40% of consumer spending, and we think that the wealth effect from buoyant stock market has strengthened this year. That's exactly right, everyone. The only reason we haven't seen a real recession yet is because the top 20% are taking up all the spending. They're the ones going out there spending. When the majority of you watching, you simply don't have enough money to go out there and spend like crazy like them. And this is leading to that K-shaped recovery. And what this also revealed is inflation expectations are skyrocketing. The survey measure of consumer expectations for inflation over the next year increased to 4.7%. And this is from last month, 4.6% in October. Consumer expectations for inflation over the next 5 years eased to a still high 3.6% from 3.9% last month. So this leads to checkmate for the Fed, because what is the Fed's dual mandate? Price stability and low unemployment. But we're getting layoffs, more layoffs are coming, and inflation's rising. So what does this mean, everybody? Stagflation. That's where you have the unemployment rate rising, but inflation is still going higher and higher because of all these people speculating in the stock market and on these assets. And also you have huge amounts of government debt being taken on by the government. And you also have the Federal Reserve announce they're going to stop quantitative tightening. That's selling assets, and they're going to start buying more assets, US treasuries and bonds. And this is why I always try to remind you guys, the stock market is not the economy. Don't look at the stock market for a healthy economy or thinking that everything is okay. Things are not okay. Things are not okay at all. And the only reason the stock market hasn't crashed is because of all this government intervention and central bank intervention. But just to lighten the mood a little bit, I thought I'd share this with you. So look at this, everyone. I did some financial planning and it looks like I can retire at 97 and live comfortably for at least 11 minutes. And sadly, this is becoming true for many people. And this is why they're trying to increase the retirement age. I saw in Germany, they tried to increase the pension age to 73 because the government pension funds are about to go bust. Now, as I'm recording this, we just got more breaking news on how big of an impact this government shutdown is going to have on the economy. So look at this. Treasury Secretary Besant warns shutdown could slash quarterly economic growth by half. So that's right, everyone. This is not going to have a small impact on the economy. We're going to see full-on economic collapse in Q4 this year, but unfortunately, we won't get the data till next year. So don't wait until the data comes out. You need to start preparing right now. So it says here, as the current government shutdown extends beyond that record, its effects are being felt nationwide. From delays in funding for the Supplement Nutrition Assistance Program, SNAP, to mounting pressure on the nation's air travel system ahead of big Thanksgiving holidays. We've seen an impact on the economy from day one, but it's getting worse and worse, he warns. He also added that consumers could also face product shortages as cargo shipments slow because of the shutdown. So I know what you may be thinking, well, okay, things are really bad, but what can we do to protect ourselves? Well, everyone, it's not going to be easy. And during these tough times, the tough get going. You need to figure out whatever way you can to increase your income, either by doing overtime at work, starting a side hustle, maybe you do Uber, DoorDash. But really what I think is the best long-term play, not relying on these big, huge corporations for a paycheck when they can just lay you off just like that. There is no safe employment anymore. You need to create some kind of business. You can do it online these days for no capital at all. All it needs is a bit of time and a bit of creativity. You also want to be paying off high interest rate debt as fast as possible, building an emergency fund so even in case you do get laid off, at least you have some money until you find your next employment. You don't have to be severely stressed, severely panicking. And then if you've done all of those, then you're one of the very fortunate people that does have money left over to invest. Well, what's always a hedge against an economic downturn? That is gold, that is silver. Also against currency debasement. I'm also a long-term believer in Bitcoin, but that's a very small part of my portfolio compared to other assets. But everyone, what do you think about this? Have you been laid off or do you know any family or friends that have been laid off? Let me know down below. Now for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.